Bismillahirrahmanirrahim. Assalamu alaikum. This is Salarab, your accounting teacher. Guys, today I'm going to start a past paper question, but before I move on, I would request the viewers who have not subscribed my channel yet to please subscribe and press the bell icon so that you would be able to receive the videos in future as well. All right, so we will continue with the basic accounting. And today, like I said, I'm going to start a past paper question of basic accounting with the name of Diane. This question has been taken from IGCSE 0452 October, November 2016. This question includes the topics of source documents, books of prime entry, rules of debit and credit, accounts and its type, and ledger. The question says, Diana is a trader. She buys goods on credit from Odomo. On 1st October 2016, Diana owed Odomo $720. Guys, before you move on to these types of questions, please remember you need to identify the customer and the supplier so that this question becomes easy to you. Diana is the customer here and Odomo is the supplier. On 1st October, the balance amount, it says the customer owed to the supplier $720. This is not a transaction basically. This is the balance which is brought down from the previous month. Or in other words, I could say that this is the closing balance of September 2016, which had been brought down. According to this particular line, it mentions that Diana has to pay to Odomo $720 from 1st October 2016. Several transactions took place between the traders in October 2016. The question says, complete the following table. Name the books of prime entry in which each document would be recorded by each trader. If the document is not entered in a book of prime entry, write no entry. Please remember that you need to identify the book of prime entry used by each trader, whether the customer or the supplier, and the documents are already mentioned. Now, where no book of prime entry is used, please write no entry, which will give you marks. Diana is the customer again. Odomo is the supplier. On October 8, invoice of 560. Whenever this type of question appears in the question or on your screen, please remember that you need to identify about the invoice. Invoice is a source document which is issued by the supplier to his customer on credit sales. And this invoice is issued to according to the customer, according to the supplier, it's a sales invoice for him, and according to the customer, it's a purchase invoice. So invoice is used for credit sales and purchases. Now the customer is going to record from this invoice, the customer is going to record his credit purchases in his purchases journal. Whereas the supplier will record the credit sales in his sales journal. On October 12th, debit note of 115. Debit note is a book of prime entry. Debit note is a source document which is issued by the customer to his supplier. It is just a request from the customer to accept the faulty good to his supplier. And as this is just a request, it does not have any transaction in any of the book of prime entry. Therefore, we're going to write no entry on both sides. It is just a request. It has no value. So we are not going to record whether it's a customer or the supplier. The third is October 16, credit note. Credit note is a source document which is issued by the supplier when he accepts the faulty goods. In other words, when the supplier confirms or accepts or acknowledges that he has received or he has accepted the faulty goods from the customer, so the supplier will send a note which is called credit note. From this credit note, both the traders are going to record their returns. So the customer is going to record this transaction of purchases return in his purchases return journal or return outward journal. The supplier will record his sales return in his sales return journal or return inward journal. When you talk about a check is a document which is issued by the customer at the time of payment to his supplier. Now, when we talk about a payment or a receipt, the book of prime entry is cash book. So both the traders are going to record this check in their cash book. Customer will record on the payment side and supplier will record this on his receipt side. On October 31st, Statement of Account 460. Statement of Account is a source document which is issued by the supplier at the end of the month to demand the amount receivable from his customer. This document is issued or it's a copy of the ledger. Therefore, no entry is made either by customer or supplier. So we would write here no entry on both sides. I hope this would be clear to you. When you move on to B part, question 2, part B, it says, name the person who issued each of the following documents. You have to write the name of the person who issued the documents given below. In each cases, suggest one reason for the issue of the document. That means to say, you are going to identify who has issued this document and what was the reason behind sending this. The first is debit note. As we discussed earlier, a debit note is just a request which is issued by the customer. And who is the customer here? We have to write the name. So Diane is the customer who would send the debit note. And what is the reason behind it? To request a reduction in invoice. Why am I saying this? Guys, when somebody sends the invoice, it means the amount is receivable. And when the customer is sending a debit note, he actually wants the supplier to accept the faulty goods and reduce the amount of those faulty goods from the invoice, because now he's not going to pay. The second is credit note. Credit note is issued by the supplier and the name is Odomo. The reason behind is to acknowledge the sales return. Acknowledge the return of faulty goods. Right? So he has already acknowledged and he has already accepted the reduction in the invoice as well. So either you write the reduction in an invoice or you write to acknowledge the return of faulty goods. The third is statement of account. Statement of account is issued by the supplier. The name of the supplier is Odomo here. The reason behind this is to demand the amount receivable or to demand the amount which is owing at the end of the month. So I can write here to demand the amount owing at the end of the month. I hope this is clear to you. Moving on to the C part, the C part says, prepare the account of Diane, the customer, as it would appear in the ledger of Odomo, the supplier, for October 2016, balance the account and bring down the balance on 1st November 2016. This question needs little effort and little in particular, this particular question needs a little focus, as this question can lead you to the wrong account. Remember, when the question says prepare the account of customer in the ledger of supplier. So that means to say, from now you would consider yourself as an accountant of the person who has got the ledger. And the person whose account is being made should be in front of you. He would be maybe your supplier or maybe your customer. He is in front of you. He is the other business. Whereas the person who has got a ledger, you are the accountant of that particular business or the particular trader. Here, you are going to prepare the account of Diana. So you are not an accountant of Diana. Diana is in front of you. She is the person from whom you have sold goods, to whom you have sold goods, and you are basically the accountant of Odomo now. So from Odomo's point of view, you are going to prepare the customer's account. And when the supplier prepares the customer account, that account is your trade receivables account. And the trade receivable is an asset. The left-hand side is debit side, the right-hand side is credit side. Remember, whenever a transaction increases the trade receivable, the account would be debited. Whenever a transaction decreases the trade receivable, the account would be credited. So you are Odomo or the accountant of Odomo, and you are making Diana's account. Now the balance brought down is already written. If it had not been written, you would have to write it here on October 1st. Debit side, the balance BD is 720. The balance BD of 720 is on debit side because it's an asset and the nature is debit. Now, moving on to the transactions. When you move on to the transaction, you will be able to find out the first transaction was invoice of 560. I am not going to go back, so I can tell you right here, the invoice was 560. According to supplier's point of view, it was the sales. It was a credit sales to Diane. And whenever we sold goods on credit, the general entry is Diane is debited, sales is credited. Trade receivable debit or Diane debit, sales credit. Now we are making Diane's account. So we are going to write on the debit side. So I'm going to write here on October 8, Diana's account had been debited by 560 against sales. Remember, we have to write the cross reference in details. This is the account, this is the cross reference. We are writing in details. The second is the debit note. As you know, debit note has no value, so no transaction is going to be recorded. When it talks about the credit sales, it says on October 16, credit sales. On October 16, credit note. A credit note means that Diana has returned goods to Odomo and Odomo has accepted it. When the supplier accepts the faulty goods, his sales decreases. And the transaction is sales return debit, trade receivable is credited. Why is it so? Guys, when the sales decreases, it is recorded on the debit side with the name of sales return. Whereas on the other hand, the receivable also decreases and it is recorded on the credit side. So the trade receivable would be written on credit side with I would write first the transaction, the date, October 16, 2016. Diana's account has been credited by $100 against sales return or return inputs, right? I hope this is clear to you. Next one is the payment. The customer has paid to us. We have received the amount. Guys, when we receive the amount, the bank is debited and the trade receivable is credited. So I'm going to write on the credit side of trade receivable. It's October 24, October 24. Trade receivable has been credited by $720 against that. The last transaction was statement of account, which does not have any entry. So we are going to balance this. Remember, I told you where there are more transactions, you have to leave a line from there. So I'm going to leave a line right from the credit side, and right in front of it on the debit side, I'm going to make a balance side here. Now, let's see which transaction has, or which side has larger amount. Now, obviously, right on debit side, the amount is larger. 720 plus 560 will give you 1280. The same amount will be written on the credit side, 1280. Now, where there is shorter side, we would write balance CD there, or closing balance. So I'm going to write balance CD here. What would be the balance CD? From 1280, you have to minus 100 and 720. So the amount is 460. This 460 is the balance CD on credit side. So the balance BD will definitely be on debit side. After October, we have November 1. The balance BD would be $460. So this is how the question is done. And when you talk about the marks would be given. It's a 4 marks, 1 mark for this entry, 2, 3, and 4. So this transaction has the value as this particular transaction, a balance BD of the next month will surely give you 1 mark, right? I hope this is clear to you. Now, here we have done the whole question. So if you have liked my lecture, please do write on comments if something is not clear, so I would be able to answer you, and share this to other people as well. Thank you. Take care. Allah Hafiz.